What tax bracket are you in? This is a common question that you might ask yourself. However, this is not your tax rate. I'll explain that more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. All right, so what tax bracket are you in? It's a common question, right? It's a logical question and one that you should very easily be able to calculate and say, yeah, well, here's the tax bracket I'm in. But it's not that simple. And if you've been paying taxes in the United States for a long time, you know that's the case. You've got your marginal tax bracket and you've got your effective tax rate. That's your actual tax rate. That's the one that you actually care about. Now, why is this important? What am I talking about here? The U.S. tax system is confusing. We've got different brackets depending on how much income you have, and all of that kind of mushes together into what's called a progressive tax system. Now, I'm not saying progressive tax system as a political statement. It's more so just this is that's how you would describe the type of tax system that we're in. It's more of an explanatory term instead of a political statement. What is a progressive tax system? Well, it's a tax system that's based on the taxpayer's ability to pay. So essentially it's set up so that you're paying less tax if you have lower income and higher tax if you have higher income. Not in a discriminatory way, but just saying if your income is lower, your means are such that you should pay less taxes versus if your income's higher. And we all know that this is rife with inconsistencies and frustrations and all that sort of stuff, but that's the essence of a progressive tax system. Now, compare that to some of the other alternatives, right? So a progressive tax system imposes a higher percentage tax on taxpayers who have higher incomes, okay? A regressive tax, though, is applying the same rate for all taxpayers, regardless of your ability to pay. Think of like a sales tax, okay? It doesn't matter who you are, where you are, what you make, whatever. When you buy something at a store, there's a flat tax that's applied to it, unless you run a nonprofit, okay? And you're eligible for avoiding sales tax. But for the rest of us, we have to pay it. That's the regressive tax, okay? That's different also from a flat tax. There's been lots of talk about turning the progressive U.S. tax system into a flat tax. I personally love the idea. I do. I know there would be consequences, but to me that would mean there's less manipulation of the tax code, and I think it would solve some of the issues that we have right now. I don't think it'll ever happen, but a flat tax rate is an income tax that's the same percentage of income for all. So U.S. Social Security tax is like that. That four-letter F word called FICA is a flat income tax. So that's what a progressive tax system is, okay? Now, how does it work? Really, really basic. Let's say you are married, you make 50 grand, your spouse makes 50 grand. So your total income is $100,000. You're not saving into 401ks, nothing pre-tax. You don't have any other investments, no other income, whatever, okay? So that $100,000 of income, okay, that's all of your income. You don't have any deductions. You get a standard deduction, okay? If you're not itemizing, well, every year you've got a choice. You can take the standard deduction or you can itemize. And typically what would be logical is you do both and you take the higher one, okay? So yeah, you're just gonna take a standard deduction. Let's say that's higher. And let's say for simplicity's sake, that's an average $25,000. Just okay, so you get a $25,000 automatic standard deduction off of your $100,000. You pay tax as a married couple on $75,000. You can see here on that $75,000 of income, the first roughly $20,000 is going to be taxed at 10%. And then from $20,000 up to $83,000, but in this case from $20,000 up to $75,000, you're going to pay 12% on, okay? And you're going to blend that together. That's going to be the total tax that you pay. You'd be in the 12% tax bracket because that's the highest tax bracket that you have. But then the average tax, so calculating, well, the first 20 grand at 10% is $2,000 of tax, and the remaining from 20 to 75,000 at 12%, that's X amount of tax. That's your total tax divided by your total income. That gets you to your effective tax rate, your average tax, your actual tax rate, which is what I care way more about than what your tax bracket is. That's your effective, your average tax rate that you pay on your income. Now, what's the point? Why do we care? Well, number one, we get this question all the time. You might have been curious about it, but number two, when you have a choice to make, which you all do, we all do, have a choice to make about, well, when I'm saving up for retirement, which account should I save into? You need to understand where you fit within these tax brackets, how this progressive tax system applies to your situation. Why? Because that may influence whether you fund all pre-tax 401k or IRA, all Roth 401k or Roth IRA, all HSA, all pre-tax 401k and then a Roth. You've got to look at that for your own situation. What if when you do all this math, you're going to be 10 grand into the 22% tax bracket, but you've got $20,000 that you can save up for retirement. You should consider doing 10 grand into pre-tax to now avoid the 22% tax bracket. Now you're just in the 12% tax bracket, and the rest of your savings should be Roth, right? All of us have this choice as to when we're saving up for retirement or whether we should save into an HSA, whether we should save in IRA, Roth IRA. You've got to decide, should you do that pre-tax or Roth? Or after tax, there's even that as well. We've done videos on that. You've got that choice to make, and you've got to understand how this progressive tax system fits to your financial life so that you can make the best decision as to how you should fund your tax shelters. But additionally, on the flip side, when it's time to start drawing money out, you've got to understand your tax situation as it relates to this progressive tax system so that you can make a wise decision as to how much to pull out, when to pull out, and whether you should pull it out from IRA or pre-tax or Roth, right? So if you are, based on your Social Security, your pension, and the current withdrawals that you're making right now, you're in the 12% tax bracket, and now you want to buy a new car. If you pull that money out of pre-tax, that may push you into the 22% tax bracket, where again, that based on a progressive tax situation, no big deal on an average situation, or when I average my taxes, no big deal. No, withdrawing all of that money out would mean you're paying 22% tax on all of that money versus 12. Right? So you might want to look and say, okay, the strategy for buying the new car is we'll take X amount out this year to keep us in the 12% tax bracket, get a car loan, take X amount out next year to pay that car loan down or pay that car loan off. All that to stay within the 12% tax bracket or 22 or whatever, depending on your situation. When you've got a choice as to when to draw money out and where to draw it from, you've got to understand this progressive tax situation so you can make a wise choice. Also, if you need to withdraw 20 grand and it's December or November or something like that, should you choose to draw a little bit during this tax year and the rest of it in January, on January 2nd, right? So that it falls into two different tax years so that it's smoothed out over this progressive tax situation. This is the creative planning that needs to be applied to your financial situation. Work with your certified financial planner on that. They should be a tax expert doing tax planning with you, and then working with a CPA, a team of CPAs that have more specialties in taxes to ensure that you're getting the very best guidance and wisdom. That's the approach we take here at KFG. So if you don't have a CFP on your team that's helping you with that, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with a K. WiseMoneyShow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.